OFX was popping. So I think limits are the best way to have entries. I think there's always going to be a time and place for market execution where price is exactly where you want it to be. But I think majority of the time, limits going to be better for two reasons. One, 90% of the time, your entries will be better. Okay. So what do I mean by that? So I've had plenty of times where I have tried to go down to the lower time frames to find better entries, wait on the higher time frames for an engulfing or um, something like that, something like an evening star to show me that price is really going to go down. And then what happens is your entry usually ends up something like that, and then your stop loss is just above the wick and whatever. Whereas if you just have a limit, you just say, okay, I don't know exactly where price is going to bounce, and I think it could probably bounce somewhere in this range. So I'm just going to have my limit right there. Your entry, I mean, if you want to have the same kind of a stop loss as this, where it's really safe, and you still want to target a 1-to-1, that's how much bigger your thing has to be compared to mine. Now, if you want to play it a little bit more risky and say, okay, I'm going to have my stop loss above the wick, where there's still really a chance that price can wick up above and then continue down, you can do that. The other reason is that you have to wait around a lot. There's been plenty of times, like I said, where I have been experimenting with the candles and all this stuff, trying to get good entries. But what ends up happening is you end up waiting for 2, 3, 4 hours sometimes. Depends on what time frame you're on. But there's been times where when I was intraday trading on the 1 hour, I would check the charts, every hour for multiple hours, waiting for a certain candle to pop up. And then it ends up on me I'm not sitting there looking at the charts, but I do have to check it way more times than I would want to. And I don't like that. So if we look at the charts here, we can see plenty of times where this plays out. Okay, now look at this right here. Look at this big entry, or this big candlestick. So your entry would have been right there. And then you're able to have your stop loss probably right below the wick, and then you want to target a 1-to-1 or whatever you want to target, right? Now, if I was going to enter, it would be right there. Stop loss would be below the low right here. Then I would target a 1-to-1. Right? If I really want to just target the next high, I could do something like that, and then stop loss could be even a little bit smaller. So basically, where your entry is, my take profit would be. Okay? And then same thing right here. If I want to enter right here, or take this break or retest right here, then my entry would be right here. Right? And then if I want to have my stop, like I just said over here, below the wick, well, then you lose this trade. Right? Whereas I could have had my entry right here, stop below the low, and target. So one, it allows me to not have to check the charts as much. And two, it allows me to not get stopped out. And if we go to all of these examples right here, you can have this example right here where this actually played out really well. But it really wasn't anywhere. So you really wouldn't have entered that. This was the start of the resistance. Then you have this entry right here where, okay, that engulfing would have been great, but then your stop loss is right here. It's more vulnerable. You had to wait around. Your entry is really low in a bad spot. Kind of just is what it is. But then you also have situations like this, where break a retest. If you would have waited for a candle, you probably wouldn't have got stopped out unless you had an entry or a stop loss, something like that. But usually, what I would do is have something like that. Would have got stopped out. So sometimes it does favor you to have the candlesticks, but then there's times like this where you'll get crazy candlesticks where it's like now it's pointless to have an entry like that. Then you also get candlesticks like this where the wick is super bearish right there, and it's like, okay, well, I'm not going to enter, and then it just continues up, and then you miss the whole entry. And then another one like this right here where you miss the whole thing. Then you could have stuff like this where there's multiple rejections, big candle, I want to enter, and price comes back down and stops you out. Okay, so overall, if you go through all of these, you can see all these examples. You would have entered here, then this big long wick right here would have stopped you out. Entered here, big long wick would have stopped you out, right? You enter here, this big engulfing, well, now you would have entered in a really shitty spot. If you would have entered on this engulfing, you would have got stopped out, right? This is one example right here where it did play out. It did go down farther and play out on a really weird spot of the level, but that would have been a beautiful entry. And you got a much better entry than you would have used if you would have got a limit. But the problem is, check this out. You got to sit here. This is 4, 8, 12, 16. So you got to check the chart every 4 hours for 16 hours to get that entry right there. Whereas I would have just entered and been like, fuck it. My stop loss is going to be that. I'm going to target roughly around that and just hope it goes up there. So overall, I think if you had to choose, I think using a limit would be much better. There's people out there that say that limits create some sort of liquidity and the markets know where you're at. I mean, I don't know if that's true, man. So far, I haven't had any problems with the liquidity. I've never really been liquidity spiked, quote unquote, is what people say. But also at the same time, I use really big stop losses. So I think it's pretty hard to liquidity spike me if my entry is like that, and then my stop loss is going to be all the way down there. Like this is some sort of a liquidity spike, right? This is some sort of that thing, but what else? This is some sort of that. But then if I'm entering like this and my stop loss is all the way up here, or it's in a spot that's so far away that it wouldn't make sense for price to just shoot all the way up there and then turn around, the liquidity spikes don't really happen like that, if that's even a real thing. I genuinely don't think, here's another reason why I forgot to even say this. I don't think, which is the reason why I trade the way I trade, I don't think you can predict price. Okay, and let me put this in there. I don't think you can. I don't think you can predict price consistently. Okay. I've tried for a long time to predict price consistently, find patterns, find indicators, find candlestick patterns that work and do really, really well. I haven't been able to find it. I haven't been able to find the pattern or whatever that will consistently allow me to catch the moves and have the stop losses that are really tight and the consistent take profits. I just haven't been able to find it. Right? Like I said, over here, right? If your consistent entry is the engulfing, well, then you would have got stopped out right here, right? If your consistent entry is the engulfing and it's like, well, this is my stop every time, it's going to be like that, well, you would have got stopped out, right? All of these examples where you would have had that beautiful entry, right? This is exactly what I want. I want the doji, or I want the evening star, the morning star. I want the engulfing. Well, then you get stopped out a lot more. I have never been able to find a way to consistently predict price action and say that I think price is going to bounce. I think price is going to bounce directly from this point and then go directly here, and it makes sense for my stop loss to be exactly here. I've never been able to find something like that. I think that you can find areas where price is more likely to bounce, and I think you can find it in a range. I think you can say, okay, well, I think price can bounce somewhere in here. Maybe it'll be right here, maybe it'll be here, maybe it'll be here, maybe it'll be here. It'll bounce somewhere in this range. So then what I like to do is say, okay, well, I'm going to place a bet that it's going to bounce somewhere in that range. My stop loss will be well above it, and I'll target whatever risk reward I want to target. And then that'll be my entire thing. And price can go all the way up here and bounce, or it can go here and bounce, or it can do this and it can play around, and it can do this and it can spike up and then do all this, and then it can go to my target. I think that's the best way to trade. I think trying to predict price constantly is a never-ending cycle of just doom. It's a constant revolving door of, I'm trying to find the best entry. I'm scaling down to the 1 minute, the 5 minute. I'm trying to find candlestick patterns and chart patterns and indicators and all this shit to predict everything. Let me tell you, man, the most success that I've ever had in day trading so far has been from when I stopped trying to predict price. When I said that I think price is going to bounce somewhere in this range and I'm just going to have a stop loss way above or below whatever that range is, that's when the wins started to come. Because I don't think you can genuinely predict price on a consistent basis. I think sometimes you can, but this is why I say that a 1 to 3, you'll probably be 26, maybe 27% win rate. A 1 to 1, 53, 54, right? Something like that. A 2 to 1, you'll be 70 to 72, right? Maybe 73. You'll be roughly around that because you cannot consistently predict it. The risk reward basically just gives you a way to say, this is what my win rate is going to be, right? And I'm just choosing that. You're basically just choosing your average win rate. There could be times with the 1 to 1, like I've had, where you win a lot of trades, you win everything for a month, whatever, but it's not going to be consistent. On average, you'll probably be 53 to 54, right? With a 10 to 1, break even is 91, you'll probably be 95, 96, 97, whatever, roughly around that range. It's just a way for you to say, this is the win rate that I'm comfortable with, and I'm just going to stick to that. This entire time that I haven't been trading, I have, well, not entire time, but some of the time I have been market up charts, and it's been pretty successful with the chart markups, man. It's been doing very, very well, and it's been the most basic, same shit that I've always been doing, just on a daily now. And this is one of the wins. Price was here, bouncing from this entire thing. So I said, okay, if price gets back down here, I didn't take this trade, but I put the limit acting as if it was a limit, and then price came down halfway and then went back up, right? It just is what it is. Go to EuroCAD. If price bounces from this and breaks a retest that, let me see some of the other trades that I have that played out really, really well. This one played out super well. We have a daily trend line, a daily level. Price bounced, went up. That was it. Stop loss was way below the level. Targeted. That's it. Super, super simple. There's nothing really behind it. There's nothing extra that you need to do. Daily trend line, level. That's it. You know, and I think price is going to bounce somewhere in the range. Somewhere in the range it'll bounce. And I'm not waiting around for hours looking at the charts multiple times a day. I'm not trying to do anything. This is the same thing. There's this level right here. All right, cool. I think it'll bounce somewhere in there. I'm not trying to predict it. I didn't see this candle. I didn't even know that formed until right now. I didn't see this candlestick and say, all right, let me check it right at the daily close. And then that, like, who gives a fuck, man? I don't think that you can consistently predict the market. I don't think you can. And I think if you do, I think that'll just put you in a position to spend a lot more time that you don't really want to spend, become a lot more frustrated, and do way more things than you have to. Make trading way more complicated than it has to be. It doesn't have to be a difficult thing. But yeah, fellas, that's that. I think trading can be really simplistic. I think limits are the way to make it even more simplistic than it already is. I think when you eliminate the entries and the trying to predict price factor, I think life becomes easier when it comes to trading. And I think it's way better with limits. So this is it, man. OFX out.